Good afternoon. This is Keith Brown in Moultrie, Georgia, with some cash commodity commentary for Monday, August 21st. It's about 3:50 Eastern Time. Markets are all higher today, so we'll take them one by one. Of course, cotton, very strong today. We went above 75 cents in December cotton. Couldn't hold that. We did close 74.83, somewhat disappointing, but hey, we'll take it where we can get it. It's interesting to note that on Friday, we actually closed higher than the previous Friday. And the previous Friday, of course, was the one that brought us the very bearish supply-demand report. So it was somewhat telling that on this this last trading session that we closed above that level. Today we saw some big follow-through for a couple of reasons. One is that there's still renewed concerns about India. Our information is they will be meeting this week to decide how the stance of their crop and whether they need to effect an embargo or not. That remains to be seen. Nothing official there, of course. And then there's just this notion that as we go forward over the next year and a half, next couple of seasons, that we may see significantly reduced cotton acres globally. So I think the Chinese are rumored to be putting into play some type of new quota, import quota, if you will. And so there's been a lot of thoughts, not much evidence, that they are starting to buy cotton now. In other words, let's buy cotton in the 70s instead of waiting, using our $1.30 cotton we bought for the state stocks, and maybe have to pay up higher later. So I think that's the purpose of the underlying tone in the cotton market. Over in corn, corn today has been really hurting, I think, from a lot of demand destruction in all areas, and of course I think corn's been content to hang around this $8 mark, but today was much better. September corn went out at $8.15, up 17 cents, so that's pretty, that's pretty strong. And I think of course the drought has not been relieved in any way. So think about the fact that they came out with some FSA, allegedly some FSA numbers that said there are 3 million more acres of corn and 1 million more acres of beans, and yet we're significantly higher. Speaking of the beans, they were up today 37 cents, 16.83. We have talked to people on the phone, clients that call in, and have suggested that one position to have on maybe is being long the beans, short the corn. And that spread, I think, certainly worked today and last week. But the purpose of that is the beans still have a chance not to make. We know corn is damaged, but how much damage are there in beans? And beans have a better balance sheet anyway. Wheat, of course, up today in sympathy with corn and beans, but in its own right, I think the Russian crop's been reduced again by a more credible entity in the grain world. So we'll see if that is the case or not. Fuel today, we've been on a tear in the fuel. Kind of missed that, I guess, but a lot of trouble in the Middle East. But we're still going to see if we can get a setback, and then we might decide to hedge something later on. At any rate, give us a call if you have any questions or comments. Thank you for listening.